Hey guys, happy Thursday. In today's video, I want to talk with you about Telus. The ticker symbol is TU. This is a company headquartered up in Canada, a massive telecommunications and technology company, 20 billion a year in revenue, positive net income, a couple billion every year in positive free cash flow. And they are related to another company that we're trading. I don't have any position in Telus. I'll tell you why. We're going to talk about them in just a second. But they did recently announce a collaboration, a partnership with a Canadian AI company, which we are trading. That company being Railtown AI, ticker in the US is RLAIF. Up in Canada, it trades under the ticker RAIL, RAIL. The way that Railtown and Telus kind of come together is the fact that Telus opened Canada's first fully sovereign AI factory, or what we would call in the world of AI, a hyperscaler facility. Railtown being another Canadian company and being in the agentic AI development business, it all kind of works together for especially Canadian companies that want to keep everything sovereign, everything in Canada, including now their data. Everything can be done all in Canada, no reliance on any foreign companies. So they're, it's kind of an interesting partnership. Why are we talking about Telus today, though? They've had a ton of corporate actions announced in the month of December. So many, I had to spend hours just reading through them and writing down my notes to sort through what is all of this. And some of them even were new to me, some of the debt instruments that they're using. And, if I put some work into understanding something, I like to take a couple minutes and film a video. For those of you that are interested in learning about finance, accounting, corporate strategies for capital allocation, how bonds and debt work, how debt ratios work, this will be just a quick, hopefully 5 or maybe 10-minute video going through at a very high level what exactly Telus is doing and why. And then if you have any questions, feel free to drop me a comment down below when we're done. Before we get into the details about Telus corporate actions in December, I want to just address one elephant in the room, because I'm hearing a lot of what I believe are misstatements being put out on social media and YouTube about Railtown and Telus partnership. People making wild assumptions that Railtown is going to be the sole AI agent available at Telus, and that's really not how these kind of hyperscaler facilities work. Telus's AI factory, like most hyperscalers, will be an open multi-partner platform available for customers to bring in their own AI software, bring in their own agentic AI partner of choice, or they could choose Railtown. And so this is very exciting for Railtown, being a somewhat new startup company, I'll call them. But you should not read this press release as Railtown is going to bring in billions of dollars on day one, because they are the only provider for Telus. It does not work that way. It's not going to work that way. But it is good to see this partnership, and it provides a growth path for Railtown, and that's what we like. In their press release back in September, Telus already told us about a couple of customers that are installing in the AI factory, including League, which is one of Canada's leading healthcare providers, Accenture, and OpenText. And we also got another press release about Ernst & Young bringing in their advanced agentic AI platform, FlexiGen AI. Do a little research about how hyperscaler platforms work, how they're typically open platforms, and don't get your head too in the clouds from people promoting ideas that just aren't true. I want you to have realistic revenue expectations for Railtown so that you make better trading decisions. The interest that I have in the Railtown Telus partnership and the future of that, how it might benefit Railtown, is what leads me to be curious about what Telus is doing in general. And some people were asking me questions about all of the corporate announcements that Telus made in December. And it started really with this December 3rd press release after their recent earnings. And they are providing some guidance of what they plan on doing over the next several years. I'm not going to run through every single filing. It would be far too confusing and take far too long. I put everything together in a PDF that I can just highlight to you guys. Let's run through the high-level bullet points. If you're curious about Telus, or you just want to learn a little bit more about some maybe not traditional debt instruments, let's see if we can get through this in a couple of minutes. In the December 3rd press release, Telus talks about their new capital allocation framework and why they're doing it. And the major steps that they're taking include bond buybacks, issuing new bonds. People are asking, why are you buying back bonds and then issuing new bonds, especially if the rates are going up on the new bonds. Dividend changes. Some people are worried, does that mean Telus is having problems? Short answer, no. And they're doing a share buyback. Let's, at a high level, talk about these real quick. Everything that Telus announced in the beginning of December and has been implementing during this entire month so far are to support a couple of strategic objectives that the company has. The number one of those is to reduce the net debt to EBITDA leverage ratio down to 3.0 by the end of 2027. They also want to deliver free cash flow growth at a minimum of 10%. How are they going to do that? With changes to the dividend, modifying their debt structure, monetization of non-core assets, including real estate and copper, and a couple of other bullet points. But we're going to talk about the dividend changes, the modifications to the debt structure, and share buybacks in this video. Regarding dividends, Telus is not actually changing their dividend. They're making changes to the dividend reinvestment program, where you could take your dividends paid for by the company and use that money to automatically purchase new shares of Telus, and you get a little discount if you participate in that program. However, they are going to be scaling that down to 0 discount by 2028. The simple way to think about this is they just don't need to do it anymore. They are at the stage where they're more interested in reducing equity issuance, limiting dividend leakage, and increasing retained cash flow that can be used for debt reduction instead of providing people discounts on their dividend reinvestment program. The second thing that they announced that they were going to do is issue some new debt. And the interesting thing about these that was not really familiar with before is these are what they call hybrid notes. You might ask yourself, why? Why are they issuing hybrid notes, and what is a hybrid note? So the why, by swapping their senior notes and the 2026 maturities into very long dated hybrid notes, they're lengthening the maturity profile on their debt, supporting the leverage and free cash flow targets that the company talked about in that December 3rd press release. What is a hybrid note? It is a type of debt security, a bond or note, obviously, that incorporates both debt and equity-like features. The equity-like feature really is that this bond is deeply subordinate to other bonds that the company has. The credit rating agencies often treat 50 to 100% of the debt instrument as equity on the balance sheet, which helps improve the leverage ratios like that net debt to EBITDA that Telus told us that they're wanting to improve. If you were paying close attention, you might have noticed that Telus paid off relatively low interest bonds and issued these new hybrid notes, which have a higher yield. And you might ask yourself, why would they do that? Why would they take on a higher yield? It's the fact that they're deeply subordinate, and because of that, the lenders want more compensation. So the yield has to be a little bit higher. Telus is effectively trading some lower coupon senior long bonds for higher coupon hybrid notes because the hybrids are treated partly like equity, which improves the leverage ratios and term out risk, even if that headline interest cost rises. Higher coupon rate, but it meets the goals that they are trying to work on to improve their leverage ratios. There were 5 lower rate bonds that Telus paid off, totaling just over 1 billion Canadian, and they swapped them out for those new hybrid notes with very long maturities. The final thing that Telus announced in December 15th, that they were going to do NCIB, which is in Canada, it's called a normal course issuer bid. In the US, we'd call it a share buyback. They announced that over the next 12 months, they are going to purchase and then cancel up to 28 million shares, about 1.8% of shares outstanding, for an aggregate amount of Canadian $500 million. The other thing that they told us about the share buyback is that it will be opportunistic and subject to leverage and free cash flow progress, reinforcing to investors that the buybacks are a secondary use of capital behind the higher priority, which is the improvement of the debt ratios, the deleveraging of the balance sheet. If you are interested in Telus, some of y'all like to trade utilities or telecom companies. This is a very interesting mix between telecom and technology and now AI. And the stock is trading at $12.64 in the US. The ticker symbol is TU. The company has 3 analysts following it. They have an average price target of $18, which is about a 43% potential price increase over the next 12 months. So do a little more digging if this is a company that you're interested in. I don't have any position in Telus, but I do have a position in Railtown, RLAIF. If you have any questions or comments about the presentation and the corporate actions that Telus is doing, or if you saw anything that I got wrong, feel free to drop me a note down in the comments below. Have a great evening, and I will see you on the next video.